to the aXpire podcast. I'm here with John Fenton of Keyrock. Welcome, John. Thank you for coming on the podcast. It's great to have you. We do this every week now in partnership with the Family Office Network. I wanted to start, John, with you introducing a little bit about yourself, how you got into crypto and what you're up to.
Well, the crypto story is actually quite, it's over 7 years now, nearly 8. I come from a traditional finance background. I was a junior trader, was a consultant, spent several years on my travels, Madrid, Stockholm, working for big investment banks. But I had a business partner that I worked with in one of the banks that got me into crypto, set up a crypto wallet years and years ago, carbon wallet, and then just basically got into crypto from there. So I could see from my investment banking background that crypto was going to be well, I still think it will be the future of finance, or have a key role to play. So the wallet then turned into a family wealth fund. Then I went into obviously working for some advising different blockchain companies. I've got a crypto custody solution, got the fund, got the wallet. Now I'm working for Keyrock, which is a market maker and liquidity provider in the digital asset space. Been working with some guys in Malta, trying to get banking industry regulations are coming in, and so that makes me in a pretty good space to understand both sides of the story.
Yeah, that makes a lot of sense. So for those who are kind of new to the market making side of things, can you explain a little bit why that adds value in the cryptocurrency space, and maybe what you see as the future of what market makers do?
Well, basically, a lot of people don't know this. In even traditional stocks and shares, you have a market maker. They provide liquidity. So if you are selling X and you're trying to sell it, there has to be the buyers. So a market maker basically provides the liquidity to make sure that there is both buyers and sellers. There's an inventory on both. With the crypto space, it's exactly the same. You need to make sure there's liquidity. If you're on a platform that has no access to these deals that people want to make, and you're just like a solo, it could take you an hour, 2 hours, 3 hours, 4 days to buy a Bitcoin. Mm-hmm. So what we at Keyrock do is provide the liquidity by tapping into other buyers, by creating our own inventories and order book replication. So we pull all of the liquidity from various exchanges. So if you need to sell your Bitcoin, you can do it instantly. Whereas a lot of exchanges and even some tokens have failed because they're on a platform that hasn't got liquidity. Liquidity means basically you want to be able to buy or sell, but it should be instant. It's for me, there's even recently, there's been an exchange that failed because they dropped their market maker or liquidity provider. And if you wanted to trade on that platform, your order would never get filled. Right. And no trader, no investor wants to have an asset that you can't sell or buy quickly. That's what we do.
Right. That makes a lot of sense. You kind of talked a little bit as well about, I mean, that sounds relatively institutional. You talked about kind of regulation coming into this space. Is that something, so Malta's been relatively active. Is that something you see spreading outside of Malta, or do you see Malta becoming the bedrock of innovation here in kind of...
There's two aspects of it. I think regulation has to come. We have all seen rises on certain coins of 200, 300, 400% in a day. That's not sustainable. Right. That's where there's what we call wash trading or pump and dumps. That's no good for any economy or any ecosystem. Regulation in the traditional finance sense stops people doing that, buying and selling their own assets between themselves. So what we at Keyrock are trying to do is build a sustainable market for longevity. So the liquidity is there, but only because there is a demand. So it goes hand in hand with regulation. So if you see an increase of over 300% in a day, that's unrealistic. Is that sustainable? No, it's not. That will never happen in the traditional market. If that happened every day, everyone would be rich. It just doesn't work like that. So Malta is going to be one of the forefront runners with the regulation. I've worked with the MFSA, and I've done some advising on some companies that are getting licensed in Malta. I'm actually part of the EUCC, which is a non-profit organization in Malta that, using our contacts, can help you get the bank accounts, help you get the license. But I think Malta will be the benchmark, and every other country will follow. I do believe that New York, they're starting stuff with the BIT license. It's coming. Financial investments have to have regulations so people don't get stung. Simple as that.
Yeah. I hear what you're saying there a lot. And with New York, it's kind of interesting. The BIT license is a double-edged sword. Like, I hear what people are saying, and I want regulation as well. But when you look at the fact that there's been 7 or 8, or I know less than 10 at least, since 2015, how does that kind of scale? Like, how could they scale, or I guess take lessons from Malta? Is it just a revised version, you think, or is it from scratch?
For me, I think Malta has gone out and passed some laws. So there's actual laws to adhere to. It's very similar to the Financial Services Authority laws in the UK for KYC, deposits, anti-wash trading and things like that. I think because the way the US is set up, it's a little bit different. Each state has their different laws, but there needs to be a carte blanche standard across the crypto industry. Malta will be the forefront and a benchmark, and if people can then passport that into another country, that would be fantastic.
Yeah, I hear you. It's hard with the borderless technology to adhere to bordered laws and regulations. So it's going to be kind of see how that plays out, especially like in the US. You see Wyoming, and I'm US biased because I'm living here, but to your point, the FSA in the UK has actually been relatively forward thinking. I saw recently they put out kind of a list of definitions of different types of cryptocurrencies. I believe there was things like crypto commodities, utility tokens, and security tokens. So I'm hoping that places like the US and other countries that are maybe less open to it right now can take a lesson from those folks who have been a little bit more forward thinking, or at least a little bit more willing to have something more flexible for an internet age. Like, we're talking about applying 1930 laws to 2019 technology. Exactly.
That's part of the problem. As you say, it's borderless. But when a government is trying to protect their citizens, they want to have their laws instilled in somewhere else. So if I'm from the UK, but I'm based in Germany or wherever I'm based, if I wanted to buy something in the US, can the UK stop me buying something in the US? How does that work? So the US are banning US citizens from buying something in Malta, for example. How can that be done without the exchanges, the regulators, geo-fencing certain things? It needs to be sort of a global acceptance across the board, but it's going to be very difficult. But slowly, it will creep in.
Yeah, I hope so too. I think that brings me to the next question, which is really, what, as an institutional guy, and we really like having you as an advisor with aXpire, given that's the quality that we're trying to work with as well. What do you see as the biggest kind of barrier to entry for an institution coming into this space? I know we've seen some start to trickle in, and probably more will happen, but is there anything that would really catalyze that movement into cryptocurrency?
Yeah, I can see several things. One, the custody solutions being fairly robust. If you look at so many exchanges have been hacked. There's an exchange recently where one of the C-level has passed away and there's money locked up. Yeah. There needs to be some robust protocols put in place by a regulator to say, right, these keys have to be shared by 3 people, 4 people, so that can never happen. Right. There needs to be some of the top 4 auditors coming in and making sure that those processes are in place. I, from an institutional background, you'd never invest in something that you think can get stolen off of you. When you're trading a commodity, oil, whatever, you haven't got the fear that commodity is going to get stolen. That is a big factor. It's the same with the pump and dumps, the wash trading. How do you know that those volumes are real? How do you know that those prices are real? It needs to be a sustainable balance and true reporting coming from these exchanges.
Yeah.
So I could say that my exchange, whatever it was making 4 billion a day. There's no proof. So until the audits are come in, the profits have been calculated and they're actually published, what do you believe? That's once the top 4 auditors are coming in and doing the accounts and the assessments, that's when I think institutional money will come in.
Yeah, that makes a lot of sense. There was an article, I think yesterday, from Google, who'd said that they had a division that was actually looking at the volume between exchanges and kind of tracking the movement across Bitcoin and Ether and Ripple, and we're finding in a good amount of the exchanges, this was kind of volume transferred between itself or other partner exchanges to kind of create this inflated environment. So it seems like trust in everything you're saying is hugely important. Yeah. So one of the questions I would ask some of these exchanges that have got super great volumes, how many traders actually traded that coin? Mm-hmm. If it's 3, you know they're passing it between each other. But if it's 50,000, you know that there's an actual true volume. But they won't disclose that until the auditors come in. Yeah, for sure. I think that's a good segue into people who solve those issues of legitimacy and trust in this space, and trying to bring in some aspects of reliability in your investment, whether that's in insured custody or that's in true liquidity provided by market makers versus wash volume. And that sounds like what you're doing with Keyrock in terms of being able to facilitate trades quickly between investors, and that's kind of part of the institutional experience. They're never going to be willing to go to a worse standard than what they used to today. So kind of talking about the adoption there, where do you see Keyrock fitting into that trust of the future that's required?
It's part of the actual company ethic, trying to create something that's sustainable. We don't promote price manipulation, anything like that. It's literally trying to create a sustainable market by making sure the orders that are there, each side, the buyers and the sellers, are filled. Mm-hmm. Just matching those orders. When you look at, there's probably providers out there that will say, right, I can do this, this, and this, and get your token increased. They exist. I know they exist. Right. But for us to be a sustainable business, we don't want to be part of a pump and dump. We want to be part of a slow-growing, steady income, revenue-driven business. It's going to be basically trying to transition from the financial markets onto the cryptocurrency new world sphere. Those traditional market making theories we're trying to bring into the cryptocurrency, not the Wild West.
Yeah, that makes a lot of sense. Do you think in something like a security token environment, market making would be more or less attractive than it would be for just a utility token?
I think for me, a utility token serves its purpose. They do. They with some of the exchanges that have them to pay fees, it's a fantastic idea. Even in gambling, you have PokerStars. They have a token where you pay your fees and etc. I think the security side of things again will instill belief that you can get a dividend off of this. It's not just pure price manipulation that you're. I think with a security, the whole idea is that it will store a value and it could pay a dividend. With a basic cryptocurrency, you're just waiting on a rise and fall. Right. So you're either longing or shorting. So there is no store of value. It's literally it's like FX. You're literally looking for ups and downs.
Right. And kind of how that fits into like an institutional investor's portfolio. I mean, we are probably, at least I can speak for myself, probably overexposed to crypto from what any traditional wealth manager would advise. I can't speak for you, but how would you see crypto assets, either utility or security tokens, kind of fitting into the traditional portfolio? Is this something similar to gold, where you're talking kind of less than 10%, something where you look at it as a VC or an alt kind of asset class, or how would you think about it in terms of allocating a percentage of your portfolio to this?
For me, again, from my background, I try to never have more than 30% exposure in one. So it's about weighting your portfolio. How do you want to do that? It depends on your remit. Do you want to go 25% of security tokens so you're guaranteed a dividend? Do you want to take the risk and go on crypto? it's the same in the financial industry. You can go into an investment facility and they will say, right, you've got a small risk, a medium risk, and a high risk. It's how you weight that yourself. Obviously, some of the cryptos are high risk, but then is Bitcoin high risk? It would have been if you bought it at 19,000. That was a very high risk, but is it a high risk now? It's how each portfolio manager or investment manager, or even yourself as an investor, sees those risks.
Yeah,
I would like to personally weight my own funds with something that's guaranteed, and then something that is a risk. So you balance it out yourself.
Yeah, I think that makes a lot of sense. An interesting question when security tokens are kind of adopted are, or is rather, do you include the security token aspect of your investments as a separate risk? And what I mean by that is if you had 10% in venture capital, 40% in traditional equities, and you had the rest in a basket of, gold and other alternatives, would you see having all those assets tokenized as a risk in itself, and would you try and kind of make sure only a certain subset were like, it's a little meta, but it's kind of an interesting thought.
Yeah, that is an interesting, that's a tough one. I'm not sure how I personally would deal with that. I would probably divide them up by asset class. But it's an unknown. Depends what the securities is. Are you talking fine art? Are you talking property? I would try and divide it by the security tokens themselves and the industry they are in.
Yeah.
Rather than, okay, it's a security token. So if you go traditional sense, you have property portfolio, you have commodity portfolio, I would divide my security tokens up the same way.
Yeah, that makes a lot of sense. And then I guess kind of the final theme here or question is around, what do you really see as the future of this space from specifically with what you're doing? It seems to focus a lot around kind of facilitating liquidity with exchanges. Like, do you think we're going to continue to see groups like the large exchanges like Binance and Bittrex and the others and Bitfinex continue to be the dominant players in this space? Do you think DEXs are going to kind of reign supreme in the end, or is there anything different that you see in terms of maybe even a more direct P2P kind of future for exchanges where Keyrock would operate?
I think it's going to be a mixed bag. You're still going to, it's the same with investment banking. You've got your Citigroups, you've got your HSBC, but you've still got some of the smaller guys that are still providing a service. Some of the DEXs have got some great ideas. Some of the new exchanges coming out have got some great ideas. So some currency pairs that wouldn't be on Binance, wouldn't be on Bitfinex. It's about what the consumer wants and what they need. Do you want to be able to sell your Zcash straight for Bitcoin, or do you want to sell your Zcash for Ripple? Then do you want to go vicariously round to get what you want?
Right.
So if the exchanges start opening up bigger pairs, things like that, because again, there's a lot of legacy investors that are holding Litecoin, but you can only switch it out for such and such coin. But you could switch Litecoin for any alt, rather than going through like a Changely. That could be a new venture for an existing or a new exchange.
Right.
I think the top players will stay the top players because they have got the robust infrastructure. But when it starts for regulation to come in with the new KYC laws, are they still going to be there? We will see. It's going to be an interesting space.
Okay, I'll throw a final kind of like wild card at you. Would Keyrock ever have a token, you think?
No, we don't. I can't say for the management, but I don't see a market maker needing a token.
Right.
We provide the liquidity for token providers, token issuers, and exchanges, but we don't really need to be doing an ICO or STO. It's not part of the business model as yet, but never say never.
Never say never. Okay, interesting. Well, good to know. That's pretty much it in terms of questions, as we've been talking for about 20 minutes or so now. I just wanted to say it's been a pleasure. Is there anything you'd want to leave as a parting comment?
I just think it's going to be an interesting year this year with some of the STOs coming out and the regulations. So it's literally just going to be watch this space to see what happens. I'm on the edge of my seat every day. There's news coming out every day. It's very interesting.
Awesome, John. Is there a way for people to get in touch with you if I wanted to reach out to you specifically or Keyrock?
Yeah, of course. It's either at john at keyrock.eu or john@eucc.eu. It's perfect. Anyone can ask me any questions anytime they want.
Okay, fantastic. Well, thank you for being on the podcast. Really appreciate it. And it's great to talk about the future of crypto from an institutional perspective with an institutional guy. And also appreciate you being an advisor with aXpire and everything that you bring to the table. It's fantastic, and hope for many more of these.
Yeah, perfect. It's been a pleasure, Matt. Thank you.
Thanks, John.
Cheers.